I want to do is just like a quick overview of where we are in this like curriculum course, if you will. Look at that. And he comes in with the custom graphics. This guy is just a badass. That's all I have to say. So Brian and I, just quick overview. Like Brian and I met really, I don't even know how we met. I think I had a like an older member that had maybe watched a couple of your videos or something, but Brian's focus is actually on education. When I met him, I was like, wow, how does this guy have so many followers and stuff? But I think it was like Enviz. You're probably one of the first guys to find Enviz way back. What'd you buy that at? Like 75 cents or something stupid?
77 cents is what I got.
77 cents. Runs to, what was it?
It ran up to 28. I sold out at 1940 on a trend line break.
Oh, God.
And
That's a
that's
good
when
idea.
that's when I lost all my followers.
Stop it. No, Brian is what I appreciate about him. When we first met, you were almost like exclusively an equity trader, right?
Yeah,
I don't,
yeah. Nothing but
almost yeah, almost exclusively shares. I don't know penny stocks or what have you, but when we first connected, which was
a year.
maybe over a year ago now.
Yeah, something like that. It's been a while.
Yeah, it's been a while. I was the options trading guy, and when I saw what this guy was doing in terms of momentum, and to me, I'm thinking, look, I am a absolute expert when it comes to volatility and understanding options where like 99% of people don't. But if I could marry like exactly knowing how and where prices are going from a momentum perspective, I was like, dude, me and this guy could be like the dream team pair for sure. And actually, I think we just hit it off. Not even from a trading perspective, but overall, just like how do we look at the market and the people that we're working with and what our real goals are from running a group perspective. I think both of us are very much focused on education, and yeah, I think of all the guys I could come up with, like Brian's absolutely like very top on the list in terms of what he has to provide and share in terms of momentum and those kind of things. Actually, he's got a couple special secret sauce things also. But with that, Brian, you wanna give him a quick high level and what we have like outlined today?
Yeah, so normally whenever anybody approaches trading or technical trading, whether it be with options, shares, or whatever, the first thing that comes to mind, if you were to approach somebody and say, "Hey, I'm going to get into technical analysis and I'm going to trade, and I'm going to use that in my trade," they're going to look at you like you want to learn how to predict the future, like you're wanting to throw chicken bones on the floor and figure out what's going to happen. And that's absolutely not what we're trying to do. We're not trying to predict the future with technical analysis. We're trying to come up with an area where we can have where we can formulate a theory and that we can react based off of that theory with a predetermined plan. So if price does this, then I plan to do this, and that's what we're looking at. And this goes directly into momentum trading. Um, the thing is with technical analysis, if you dive off into YouTube, you can get so much bad information and so little good information on how to actually attack the charts and how to actually set up trading plans and how to actually perform a momentum trade or even how to read a momentum indicator properly. So today we're going to be looking into volume based trading. We're not going to be looking into arbitrary levels where I get to draw a line and I get to pick this and pick that on the chart. This is all going to be unbiased. It is what it is, and we're going to have to react to it based off of what's in the indicator. And we're going to be looking at a momentum indicator for what it was actually intended to show you. Specifically chosen on this, we're going to be looking in the MACD in a couple of examples, and I am going to showcase my stochastic, which it's proprietary to Gator traders, but it's not
You
so
doing the Marcy thing?
with the stochastic, the Gator trader stochastic, a little bit different,
Oh,
but
nice.
I am going to showcase the stochastic, and we're going to talk about how the stochastic actually works, and then just show what my little version of it does. It's not anything super special or crazy or anything like that, other than the fact that it draws blue and red boxes whenever you should or should not potentially get into a trade. So with that said, checking the little chats over here, make sure nobody has anything crazy for us before we start.
Yeah.
Uh,
If
I
you guys
am
have questions too, there's a Q&A section. I can handle the chat while Brian's doing his thing. But if you have questions for Brian, can you guys separate it to the Q&A sections so that they're kind of pulled off to the side and he doesn't have to go sifting through the Yeah, so scroll up. I sent Brian's YouTube link in the chat, by the way. So it's youtube.com/c/Gator Trader, plural. But
Yeah,
it's in the chat also.
there is an imposter out there that wears a leather jacket and looks like
This guy has more imposters than I've seen. I don't know how you do it, but yeah,
flattery. What do they say about flattery? Or
yeah.
imitation rather. But anyway,
Impersonation, best
so
form of flattery.
there's not a whole lot on my YouTube right now because it was really focused on just a few different tickers and not really focused on technical analysis in general. And I am shifting my entire company to being not one or two stock communities or anything like that. I'm trying to swing everything to being just purely focused on this is what's in the charts. This is how you read them, and you can go and attack whatever it is you like in the stock market, however you want to attack it with those charts. And that's kind of where I'm going with it. So with that said, just like Paper Gains, Gator Traders is not a financial advisor. So please don't take any of this as financial or trading advice. I recommend that everybody speaks with a financial advisor. Whether you use them or not is completely and totally up to you because it is your money and you're the one that risks losing it by trading. All trades carry risk, and none of the techniques shown in this production or pretty much any other production that you'll ever see with regards to technical trading can absolutely mitigate risk. This is especially true with options trading. You've heard all this before. Unless anybody has anything, I'm ready to get off. I'm ready to get off into
Can
this.
you guys tell that this dude is a pro? Like, how many times have you done that, man? That's awesome.
Too many. One too many,
Yeah,
man.
I love it. Hey, so when you get into this, what we called this I called this like the momentum trading piece, but what Brian's about to show you guys is has a lot to do. He's got it trading with volume, right? And so I've received a lot of questions recently in terms of trading price action and marrying it to volume. So if you're in here, we got a handful here right now. Maybe we'll have some more coming in as we go. This is that we're taking everything we learned from the strat. We're gonna add. Then we added the Wyckoff, accumulation distribution, and now we're taking all of that and we're adding on momentum and tying it to volume. So Brian is the guy that we want to have go over this. So, dude.
Yeah, and with that, now granted, I'm not a strat expert, but I am
Right.
going to show you how to use a couple of tools, especially since I can drive right now, because I thought I was going to be looking at a PowerPoint and just having to doodle through the annotation. But now that I got control,
No,
we're going
I
to be
won't do that to you, man.
charts, and I want to show you a couple of ways where you could potentially upgrade your stratting. Now, granted, I'm not a strat dude, but I'm sure y'all can figure out
Yeah,
a way to
absolutely.
use this. So I'm kind of excited to get off in it. I'm ready. Can we get in? Can we get started now?
Let's go.
Let's go. All right, so trading with volume and momentum. In case you're wondering who Brian Reeves is from Gator Traders, that's me. That's not the other guy that's talking. That's me. So what we're going to be looking at primarily today is going to be key levels based on volume. We're going to be looking at support and resistance that's generated by the market, not by you clicking on trend line and connecting tops and bottoms, not connecting whatever it is that you want to connect. So there's a thing in technical analysis where you can actually form your chart to your bias subconsciously without even knowing it. If you really, really like Tesla, or you really, really think that SPY is going to be going up, or you really think that IWM is going to crash, your lines will reflect that. Most of the time, unless you have an incredible amount of discipline, your line work is going to reflect that. This is going to get rid of that. This is going to make that where it's an impossibility for you to draw any other conclusion than what the chart's trying to tell you. Unless you just want to ignore it completely. So with that said, what this is going to allow us to do is it's going to allow us to see where concentrations of orders have been filled. And we're talking about retail, we're talking about smart money, we're talking about big money, we're talking about institutions, we're talking about everybody, because no matter what anyone does, smart money, big money, dumb money, retail, or anybody else, they cannot hide from volume. They cannot hide from volume. So we're going to go find them. Our job is to find out where these people are going to be. That is how we can trade with the smart money and make sure that we're not doing stupid things, or at least so we can be protected by that smart money. Now, running a little bit ahead of my little slideshow here, but this is going to show us where smart money specifically is loading or unloading positions. And it's going to be very, very obvious where they're doing that at. And I don't mean left to right where they're doing it. So we're not talking about time. We're talking about price levels. All right. So better support and resistance levels than arbitrary line work. We already talked about that. You can't create this stuff on your own. You can't. It is what it is. And that's the beauty of this. And this is going to, and the reason why this is so great is because it's going to help you to remove bias from your trades. It's going to help you escape that confirmation bias, the subconscious confirmation bias that you may end up be putting into your charts to see what you want to see, and then reacting to what you want to react to, as opposed to reacting to what's actually there and what serious data and serious analytics and everything else is actually embedded and hidden inside of that chart. We're going to extract that by using the volume profile tool. Now, there's several different types that we can use on TradingView. There's the big one on the left, the visible range volume profile. I don't use that ever. I used to use it. I don't like it anymore. I like the session volume tool, and I like the fixed range volume profile. And I'll show you how to set all this up on TradingView whenever we switch back and forth to the chart. If you're unfamiliar with the volume profile tool, we got a little presentation here for you to kind of get you acquainted to what's all going on this. Now, what this thing is doing is it's showing you a volume quantity of or by price levels. So how many shares have traded at any particular price, and that's over a given range of time. Now, if we're using the session volume tool, that range of time is going to be one session. That's going to be one trading day. If we're using the fixed range volume tool, that's going to allow us to look at the chart and say, okay, prices have been trading between $300 and $382 for the last 16 days. We want to know where that line work is and where that accumulation and distribution and where that value is. So we're going to be able to use the fixed range volume tool in scenarios like that to give us incredible support and resistance lines and areas where we could potentially set up trades and react to. And like I said, this is non-arbitrary. There's no drawing involved in this. You drop this thing down in your chart and you're done. It's beautiful like that. The area that's highlighted, you see that this is an area that is more brightly colored, and this is more darkly shaded outside of it. This is called the value area. So you have a value area high and a value area low. This is where 70% of all trades in the range have traded. That's important because this is narrowing down where smart money is. This is showing you where they are concentrated, where their efforts are concentrated, where they're loading or unloading, so on and so forth. You have buying pressure. That's going to be the more brightly colored on mine. And you have selling pressure, which is going to be the most darker colored, whatever. And you have, whenever you add these two cumulatively together, you'll find out exactly where, how many shares have been traded in these areas. It's not important to actually know the number. You need to know the structure. The visualization is a lot more important than the math in this particular thing. So put your calculators up. I know everybody was getting ready to hit it up with the algebra. It's not needed on this. Thank God. Thank God. Next thing is going to be the point of control. This is going to be the most important part of our volume profile. This is the line that we're really and truly after. The point of control, it sounds important. You talk about the point of control. I mean, it sounds like it's important. It is important. This is the area where the most shares have traded. So this is going to be the most contested area of support and resistance. You're going to see the most volatility around this area here. You're talking about a great place to where you could potentially see a bunch of sideways price action for some of these advanced option strategies, like you'll see paper gains using and things like that. This can be found a lot of times in this level, just like setting up some type of condor or strangle or anything like that using these value area lines could actually put you in the money on some of these advanced strategies. Me personally, I don't trade that way. It involves entirely too much thinking. I like getting in, getting out. I'm a scalper more than anything else. I'm a momentum trader. But this is a good way that you could set those types of scenarios up. So just kind of bringing this back into the paper gains world, this is a way that y'all could potentially use that. The one thing that's important about the point of control is we can actually use this to help us develop a directional bias with our trades, meaning that we can use the point of control as a filter. And we're going to go over that a little bit more whenever we get into the charts, but just briefly so that we make sure that we touch on it. You can say that as long as I'm below the value area high and above the point of control, I will only take buy signals. I will not take sell signals here. I'm not going to do it. And more times than not, you're going to be right. Okay. A lot of times.
So are you using that, like, I mean, because a lot of people use VWAP, right? And I think Are you guys familiar? Answer in chat. Is everybody familiar with what VWAP is? Or if you're, yes, okay, cool. Are you familiar with what point of control is? Michael, yes, yes. Yes, yes, yes.
Okay, so we
Okay,
got a bunch of guesses. Okay, good. So I don't have to
love
explain
it.
anything else. Y'all have a great evening. Uh, okay, so the so we can use the point of control as a filter. Okay, price is above the point of control. I'm only going to take buy signals, and we
So
can
point of control, Michael's asking. So this is where if what he has, there's a high like inside these two blue lines, that's about 70% of the volume. And you can typically, and correct me however you use it, Brian, but um, can you repeat what you said one more time? If it's above the point of control or the below the point of the control, you're
this is
looking for what?
this is this is just a basic filter for trades. Now, this isn't the end all be all. Of
Right.
course, you have a great buy signal down here, and stock prices close up here for the day, right? So it's not the end all be all of it, but this is telling you where the smart money is, where institutions, hedge funds, banks, and things like that may be loading up. So typically, what you're going to want to do is look above your point of control. And if price is above your point of control, I'm only going to take buy signals because I want my stop loss right underneath the big dudes that have been accumulating to build this in the first place. Retail ain't built this line, right? Same thing if it's down here. If price is coming down here and it's ranging around, playing around down in this area, we're going to look at the point of control and say, okay, well, I'm only interested in sell signals because I want to hide above over here, above where the big money is. I want those guys shortened down at this level to protect my position. So this, I want to try to position myself on top of this line for like a bullish play. I want to try to get as close as I can to this line to be right up there with the smart money, and I want to hide just below. And that's going to give me a really, really tight tight stop loss. The volume profiles are in Thinkorswim. I am looking at the chats while we're doing this. So they are in Thinkorswim. Now, I do not have the engineering degree required to tell you how to find it on Thinkorswim. So good luck, but I'm sure somebody's got it on YouTube. So anyway, the point of control is very important. We're actually going to use a series of point of controls. And this is something that most people aren't familiar with at all. We're going to be using a series of points of controls, or POCs, to help us determine which way a stock may go before the first opening candle. All right. So this is fun stuff. This is fun stuff. Next thing we need to look at is an actual structure. This thing makes a structure for a reason. If it wasn't important, then it would only give us those three lines. So it must be important if it's going to write all these squiggles and bars all over on the side of the chart. So let's study those. Let's look into those. The higher stacked ones, the bigger ones, are called high volume nodes. And this is showing other areas of potential support and resistance by concentration of price action at key levels. Now, what that simply means is these are other areas where we may see smart money interacting with it. For example, let's say price is point of controls right here, and price is somewhere in this area. We could be looking at potentially buying long here and trying to get it back up here, because smart money may be using these two prices to accumulate. This is called a double distribution pattern, by the way. But they may be using these two prices to trap retailers and accumulate their own shares and do their little manipulation things and everything else. That may be smart money forming both of these. So we could say, okay, well, I'm going to look at this as a range. I'm going to buy long here. I'm going to sell short here, and just play it from there. Have a stop loss on either side of it. Whatever the case may be, there's a dozen different strategies you can set up like this. The next thing, or last thing I want to say about a high volume node is expect support and resistance in these areas. Expect price to have a problem making it through these areas. Next on our little list over here is going to be a low volume node. It's the exact opposite. It's an area where people have been genuinely disinterested in buying or selling. There's very low trading activity. Typically, whenever price breaks through a resistance, breaks through a high volume node, right, it's going to race to the next resistance. It's not going to want to stick around in these low volume areas where there's just no trading interest. There's no orders waiting in these areas. The orders are waiting and concentrated at our key levels of support and resistance. And we can see how that plays out on our volume profile. Now, this one here was actually taken from the session volume profile tool, which is, again, showing us one trading day. We're going to look into fixed volume ranges and things like that after we get through a couple basic examples and whatnot that we have on the next few slides. Now, this is my settings for the session volume profile. I'm going to switch to trading views chart just a minute and show you how to find this thing, because there are two of them and one of them sucks. Okay. This does correspond with supply and demand trading. This really and truly does correspond with it. In fact, you can use some of those zones from supply and demand zones and things like that to establish volume profiles. We'll get into all this kind of stuff in a little bit. These are my settings. I'll leave it at 70. If you move it to 68, you actually get one standard deviation in price. And it also is, Fibonacci stuff. 70 is close enough to that. I do change my row size to 120. Colors are your preference. I'm partially colorblind anyway, so it doesn't matter, but that's what the settings look like. And this is what the session volume profile tool looks like on a chart. This is a 15-minute chart. You can see up here, Tesla's 15-minute chart, and you can see how these things stack up, and they bracket an entire day from pre-market all the way to post-market. Now, TradingView is really neat that in the way that you can, let me go back one slide. My little laser pointer's messing me up here. I never used this thing before, but it's kind of neat. But if you come here to where it says all, you can actually switch it to each. You can switch it to pre-market only. You can switch it to session only, or you can switch it to post-market only. I think that's all the choices. We'll look at that in a minute. But right now I have it on all, so it's looking at all of the periods inside of the session. So pre-market, actual trading, and post-market. If I were to put it on each, it's going to give me a volume profile for pre-market, then another one for session, and another one for after hours. Believe it or not, some of those after hours and pre-market POCs and whatnot can be super, super powerful levels of support and resistance. It's kind of cool. I'm still not through studying that. Is this included in the free version of TradingView? You're going to need to look into, if you're using the free version, you're going to need to look into the community made, community created indicators. They have some stuff in there. To get TradingView stuff, you actually have to have a pro plan or above. So pretty much everybody charges for use of a volume profile. It is an institutional tool. It is the real deal when it comes to trading. Between that and order flows, I mean, those are the two biggest things. So like I said, like I was saying, this is what the thing looks like on the chart. I told you I wanted to talk about directional bias. And we're going to get into directional bias first before I talk about why I highlighted these random areas as best as I could on this chart. So directional bias, to get an idea of what a trade may do, right? One thing that we need to look at is a higher time frame. We need to look at a higher time frame of what happened over multiple hours, multiple days, multiple weeks, multiple months, whatever the case may be. And we're going to look into market structures. We just talked about that, or y'all just talked about that with Wyckoff, talking about market structures with accumulation, markup, distribution, and markdown. I have to use a bastardized version of everything whenever it comes to market structures. I use a combination between Wyckoff and Stan Weinstein. It's really and truly the same thing, but Stan simplifies it down into a stage 1, stage 2, stage 3, stage 4. Stage 1 being your accumulation, stage 2 being your uptrend, stage 3 being distribution, stage 4 being downtrend. So however you want to communicate that kind of stuff, or however you understand it, just know what your stock is doing, right? So we're looking at it, like, for example, here we have a series. Let's look at this right here. We have a series of higher highs. Each day we have a higher high. Well, look what the POC is doing. The POC is stepping up. You have a huge gap between this POC and this POC. Why would we, if we were here in the trading day, why would we look at this structure here, these three higher POCs, and with an acceleration of aggression going on right here, why would we look at this and say, I think Tesla's going down today? What the heck is telling you that? Everything's suggesting that Tesla's going up. The market structure is up. The trend line, if you were to draw a trend line, is telling you up. And the volume itself is showing that there is more aggressive buying activity going on. The volume itself is telling you that. And the price action, of course. I mean, they can't get there without price action, but the concentration of volume is constantly getting higher. That's showing that the buyers have an appetite for these prices, and that the sellers aren't really all that enthusiastic about trying to drive prices down. Once we get into this area of the market here, and you see this slowdown between these two trading days, why would we assume that Tesla's going to continue to go up? We shouldn't. We shouldn't, right? We shouldn't automatically assume that it's going down either. We should look at this and say, we don't really know what it's going to do, but it's probably got some issues that it needs to sort out. It needs to consolidate, or it needs to distribute. It needs to shed some of these early buyers. They need to go ahead and take their profits and move on, whatever the case may be. But we shouldn't expect the same explosiveness that we saw on this trading day whenever we have, with this preceding gap up here with the POCs. We shouldn't expect that with something tight like this. The stock runs sideways for a few days, and buyers are getting completely and totally rejected. They're not able to really do anything as far as new higher highs or anything like that. We can look at this right here and assume that prices may go up, but they might want to come down and retest this range. This is where the fixed volume profile tool is going to be your best friend. And we're actually going to look at this structure on the chart, and I'll show you what I'm talking about. Skipping the highlighted parts right now, we see this major gap down here. Why would we assume that Tesla is going to go up? We shouldn't assume that Tesla is going to go up, even though that's what it does. There's nothing on the chart telling us that. React to what's actually on the chart. Once we're above that POC, once price is above this POC, now we can assume like, okay, maybe we can see some bullishness in this. Maybe not. We're going to see what happens. Maybe it's going to come back down and retest that POC, which is exactly what it did. We're going to talk about naked POCs. That's going to be another topic. So on and so forth. So I'm not going to try to beat up the entire time that we have together talking about this one particular chart, because I have a few other things I want to go through, and I want to get some live action charts so we can actually get some Q&A going on, and I can show you some of the dynamic uses of this stuff besides a PowerPoint slide. Now, these highlighted things are exactly the same highlighted areas. So we're going to be looking into this part of our chart right here. So look at this POC. I have this one highlighted, and I have a little line drawn from this POC here. Dragging this thing all the way across, it actually ended up acting as a support. It was a direct impact for support. Why? I don't know. There was unfilled orders there. I don't know. There's no way to understand what goes on in the mind of the market makers and whatnot. But we know that this is a line that we could have reacted to. Did we? I didn't. I didn't know it was here. Okay. I'll admit to it. I didn't even see this one. But that's something that we could have reacted to. We could have taken a position on here, and we could have sold that position up here. Look at this, acting as a resistance, right? We could have sold that position. We could have taken this from here all the way to here. I'm going to show you with our MACD tool in just a minute, and the stochastic, on how we can get into trades of that caliber. So going back into this, here we go. This is that area. This is that point of contact with the point of control, that little highlighted area. Going in, you can see that there was a breakout above the value area, a breakout above the prior day's POC. This is telling you something about the aggression of the buyers in this area and the lack of conviction of the sellers in the area. It crossed this high volume node, crushed it. This is showing you that you have a bed of support right here on that old POC. Prices are going up at this point. Look at the volatility on the POC. Look at the volatility just absolutely go nuts right here. This is what you expect in this area because there's orders all over the place. Limit sells, limit buys, market orders, everything else. So all stacked up in this area. Eventually, the bulls went out, at least in the initial tug of war. They stop out, coincidentally, right at the previous day's high, right? So they don't stop out, but they run out of authority, they run out of power. Prices move into a head and shoulders, slip back down, blah, blah, blah. Now you can see the prior day, this being the prior day now, we're looking at this trading day. You can look over here, you can see that the POC was a direct support. Look at the huge wicks down below this POC. If we were to stretch this line out here, look at the size of the wicks. Look at the buying pressure coming off of that. If that doesn't scream at you to buy, to look for your signals to get in the chart and to figure out how you're going to get long and how you're going to get bullish, then there is nothing in this world that can fix that for you. This is as bullish as it gets. You have crushed yesterday's volume at this. That's what this is saying, that we have crushed it. We've dominated it. We're going to win. Now, of course, they don't win. They end up getting screwed by the very next day, but it is what it is. It's stock market. Nothing lasts forever. So let's move on.
They won for the day. For
They
sure.
won for the day. And then they didn't, they celebrated too hard. They drank it up and, they forgot to show up. So let's get into the MACD. MACD is a overused and misunderstood little tool. It's an incredible indicator. It's absolutely an incredible indicator. Not only is it a trend following indicator, but it's a momentum indicator. It's made up of two different moving averages. So it's building a crossover system in there into your chart for you. And using it all together the way that it's supposed to be used is pretty handy. So I'm going to look at it mainly through the lens of it being a momentum indicator and a divergence detector through what we're going to be going through in the next few slides. The MACD is made up of three components or ingredients, or whatever you would want to call it. You have the histogram. The histogram is the measurement between our two lines. If the blue line is over the reddish orange line, whatever it is, then you're going to have a histogram above our zero line. If it is the other way around, if the red's over the blue, then our histogram is going to be shooting down here below the zero. Now you'll see that these things move from negative infinity to positive infinity. That is literally the range of the MACD. It's not a true oscillator, trapped between 0 and 100 like the RSI or the stochastic may be. This thing can go to some pretty wild levels at times. But for the most part, it usually likes to float around -10 to +10 would be pretty normal range of operations for this thing. What we're going to be looking for this is going to be a couple of different signals. First off, we're going to be looking at divergences from the histogram, from point to point. Okay, this is a great divergence detector. If you're not familiar with divergences, I encourage you to brush up on them. They can absolutely add a level of elegance and professionalism to your analysis that you are currently lacking if you don't know how to look for divergences. Secondly, we're going to look for crossovers. We're going to look for red over blue, blue over red. We're going to look for those as potential triggers to enter and exit trades. This is not to be used, in my opinion, it's not to be used as a primary means of entering a trade. No lagging indicator should be your primary means of entering or exiting a trade. And lastly, we are going to be looking at a crossover of our lines and the zero line, or a cross under for that matter, because that's whenever you're seeing how this thing works as momentum, is very similar to the RSI with the 50 line. So now that everybody knows what we're looking at with that, I want you to pay attention. This is the same chart that we were just looking at in bar replay mode. This is our massive run up. So we know what happens. Okay, it's going to be no surprise. We know what's going to happen here. But using all this stuff together, we have this old area where apparently there was a vicious response from bulls. A lot of orders, a lot of volume was in this area. Pushed prices back up, came and it double bottomed in this area. So that's our price action confluence for this. We're on the current day's POC, our high volume node. We have an old POC coming through this area, and we just made a double bottom structure with these candles, right? So there's a huge amount of bullishness. This time frame right up here, 15. I use all time frames though. I mainly trade the 5. But anyway, that's our price action. You know, that's what gets our attention into this. Next, we're going to be looking at our indicator. All right, what's our indicator saying? Well, currently, all the way up to this point, our indicator is saying that this sucks. The momentum's dying. We're actually diverging. We're getting, our aggression from our fast line is a lot more than the trend, the trend itself. So we have that going on here as well. And then we see this sharp turn. We see this sharp pivot, and boom, we see a crossover. This candle right here is where the crossover happens. It's going to be this little indecisive, crappy candle. This open higher is our trigger. Boom, trade entered. Where would our stop loss be? Me personally, stop loss is probably going to be somewhere below this POC, unless I'm really close to the end of the week trading my little weekly options. Then I'm going to be hiding under the prior candle, doing that strat stuff. Okay, so I'm going to be hiding below it, or Fibonacci retracement of this candle itself. One of those levels, I'll be hiding my stop loss below it. This low volume node would concern me, because I know if prices come back down that they could race through this area, that people aren't wanting to trade this. So I'm really interested in trying to see if I could hold on to my position above the POC. That way I can have smart money backing me up. Now, I am far away from this. You could also make the argument that, okay, well, I want to wait for a retest. Arguably, the retest has already happened with the double bottom. So there's a couple of different ways you can think about approaching it. You're not going to be able to get yourself into every trade. Stop trying to talk yourself into getting stop trying to talk yourself into getting into every trade whenever you backtest, because you're building bad habits whenever you do that. The result of that trade would be an absolute banger. I imagine if Jason got on his calculator right quick, he could probably tell you exactly how much a 648 weekly call would make it if you held it all the way to $672, because he is the options wizard. In fact, I think they call him and ask him how much options should cost. But so we have our trigger. or we have our setup, we have our trigger, everything's in confluence, and you're talking about a banger trade. I mean, this is $30 worth of premium added to your trade. This is huge if you're trading weekly options. This is huge. It moves into a head and shoulders. If you don't get out for a head and shoulders, I don't know what to tell you. But this is an easy head and shoulders pattern, a good reason to exit. You also have a trend line that you could use to exit. That would get you out right on the other side of this range. Or you could use moving averages, like a whole moving average would chase this thing really close, would be a good way to get out of a trade as well. Moving on to another little scenario here. This is opening. Everybody's scared to death of Tesla at the opening. I mean, if we were in a classroom, if I was standing up in front of you doing this presentation, I would probably be able to get 20 or 30 people to raise their hands if I said, are you terrified of trading Tesla's opening 10-minute candles? And this is, this is 15 minutes. This is the first 30 minutes of the chart. Are you scared to enter Tesla before 9 o'clock? Most people are.
The premium crusher, for sure.
The premium crusher, right? So are you scared to enter it? And then my next question would be why? Well, the volatility. It's too volatile. Yeah, but I make literally most of the money I make in trading is in the first 5 minutes of the trading day, doing exactly what I'm about to show you here, except I'm doing it on a different time frame chart. This is the 15. It doesn't matter what time frame. Market's fractal. All the charts work the same way. So anyway, we have this old POC. This is from this day over here. So this is 1, 2, 3 days back. You see the POC right here, drawn all the way through, traced out for you. We can see that this has been validated as support several times. So if it's been validated as support, the logical conclusion is that it will probably validate as a resistance. Prices skyrocket straight out of nowhere first thing in the morning, and they die on this old POC. Look at our MACD. Our MACD is getting incredibly bearish looking. It already had a crossover. Of course, we can't take an options position in pre-market unless I'm doing it wrong. But we couldn't take an options position here. So we're looking into this. Not only did it crush or get crushed by this old POC, and it's rejecting all of this value from up here, this higher value from up here, but it also closed this candle below today's POC. Now, looking at all this together, this is telling me that, okay, this might be relatively safe. Look how close I am to the POC. I can put a stop loss just on the other side of this, a mental stop loss, a trail, whatever the case may be, and I could be good in this trade. The result of that trade, we would be entering right here, would be at least this move here. Now, notice our POC moved. This is going to happen to you throughout the day. It was here. Now it's down a little bit lower, right? So no big deal. But we could have got in on the opening of this candle. This first move is from roughly 703 down to 690. If you were able to figure out a way to capture all of that move just on that, huge money in just 5 or 15 minutes. It comes back up. It actually retests the high value or the high value area, rejects out of that, gives up the POC, double bottoms. That's a perfect area to exit. I'm a scalper. I'm going to exit on this candle. I'm probably going to enter on this breakout again, and I'm probably going to get out on the double bottom. I'll end up trading this 5 times in a day. You don't have to, don't be like me is probably the best way to say that. That is enough of slideshows. Let's actually get into some charts where I can freestyle a little bit. And yes, I do get more chaotic than this. I apologize. Sorry, not sorry. We're not going to be looking at Ichimoku. If you don't understand it, Ichimoku is fun.
Before you jump into that, do you guys have any questions so far? I don't know if the POC is new or not. I know some of the guys use supply and demand. And to be clear, right, like that is supply and demand derived directly from volume profiles. I mean,
yeah, I'm about to actually show that.
And then the MACD he's using here, it's a MACD histogram. If you're in like some charting softwares, if you just put MACD, it's just the 2 lines, but the histogram is also definitely helpful.
All right, so let's I didn't know that. I thought it was always like this.
No,
I guess
it's just the 2 lines.
Okay, cool. Kind of like the tricks on TradingView is broken. It only has 1 line.
Yes, very much like that.
So anyway, if you're going to be using the session volume tool, first off, let's show you the right one. If you type in session, you're going to get these two. I have one favorited, so it's going to show it up here as well. Do not use session volume HD. High definition sounds cool. We like that in our TVs. We do not like that in our volume profile, because what's going to happen is your POCs are going to move as you zoom your chart in and out. And these are not things that should move. All right. This locks it in, the regular standard session volume profile, that locks it in. Now, the second one that we're going to be talking about, I can show this example on SPY. Yeah, I can do that. So the second volume profile that we're going to be talking about is not an indicator in TradingView. It's actually a drawing tool. That's going to be the fixed range volume profile. If you're using desktop, come to where it shows the long position and these prediction things. I forgot what the actual category is called. And it's going to be at the bottom, fixed range volume profile. To drop that on your chart, it doesn't matter. Look where I'm at. I'm all the way up here. All right. It doesn't matter. You don't have to sit here and try to pick the right candle and go to the wick and all of this. If I want to look at this range of time, that's all you're doing is looking at the range of time. It's going to find the price for you. Okay. So it doesn't matter where you click, and boom, we have a volume profile that covers multiple days. Neat, right? Absolutely neat. Now, the question that we had just a minute ago was how does this work with supply and demand? How does this work with supply and demand trading? Okay, that's a great question. That is an absolutely wonderful question. So let's look at this volume profile. Let's answer that question right quick, and we'll turn around and go. We'll turn around and go back to that in a minute, and we'll also answer the second question before we go into SPY. So supply and demand trading, normally we would be looking for big candles. This looks good. Big candles right here. This is going to be a supply zone right up here in the top. A couple of different ways you can get it. And I personally like to use Rinko or Heikin Ashi. I can use regular candles, look at the inside frequency, outside frequency, drag a rectangle to the side. Boom, we have a demand or a supply zone or demand zone. Got it. What about the volume profile? Let's actually talk about what the volume profile is telling us just by looking at it. And let's do that by getting rid of price altogether. Let's just look at the volume profile. So what we're looking at,
fancy.
I am fancy. Tricks,
Yeah.
tricks. We could also do this on a 6.5 minute chart if you like, but that's a little trick that I learned yesterday thanks to Jackman. But anyway, so we have a volume profile. What is this actually telling us? This is telling us fair value. Fair value, POC is fair value. This is those areas surrounding that is where value is, where people look at this stock and say, this is a great place to sell, or this is a great place to buy. This is where your bulls and your bears are clashing for control over price action. Everybody up here, all the buyers look at this up here and say, this price is too expensive. This price sucks, right? I'm not paying this for this stock. The sellers down here are saying this is too cheap to sell. I'm not going to make any money. All right. Supply and demand trading. If we add our indicator or our price indicator back to this, you can actually see this play out. Look at this area here and consider this a potential area of demand. If we were to take our rectangle and put it on that potential area of demand, then you're going to see it behave like a demand zone. If we were to come up here and say, okay, well, this area is too expensive, people don't like this price, we're going to see this behave like a supply zone up until the point we see the rejections, and then the push through, the violent push through, a retest, and then a rebound as buyers now are looking at this as a good, cheap price. This is supply and demand trading. This is just a much more visual and intense method of doing it, and it's not very arbitrary. You don't get to pick a whole bunch of things with this. With the fixed volume, you get to pick the start and the finish, but it's actually going to, no matter how ridiculous your line work may be, you're going to get useful lines out of this thing. All right. And there's no reason why this should be connected to this. There's no reason whatsoever. So we're going to be looking for, using the fixed volume profile, we're going to be looking for areas like this, where we have static highs and static lows. Okay. This is probably going to do, oh, Jason, forgive me. I keep forgetting the name of the stupid indicator, but it's chickenpox indicator is what I call it.
Oh, ADRs. Yeah.
Okay. This is going to be very similar.
Actually, Ken looks like Ken's asking to do
SPY. Yeah, I'm going to get to it. And how can I set this indicator to only be a couple of days? Is the red line automatically placed? So I'm going to try to answer these as I go. But anyway, that's what we're going to be looking for to set up a fixed range volume, which is actually answering Orca Wells' question here. Is the red line automatically placed? Yes, the red line and the blue line is automatically placed. If I come here and I pick this to be my range, that's what drops, just like this. So that's gonna handle your POC. And this is actually covering multiple days. Notice that if I were to use the session volume profile, right, which is only giving us 1 day at a time, it's going to look something like this. If I'm using the fixed range volume profile, we're doing like this. We also have the periodic. If you spell it correctly, actually, it works a lot better. Period, periodic volume profile. This is neat. So what if I want every week to have a POC or a volume profile rather? Let's get our fixed off of there.
Well, I actually really like that.
Dude, it's strong, especially for you doing your swing trading stuff. This is money for you, bro. They have a month and everything else, and you can actually put multiple ones on this, have it overlaid different colors, however you wanted to set it up. Now it can get freakishly noisy.
Yeah, the volume profile in general, I think everybody will have their own settings, but I customize. I do have it on my charts, but you probably won't even see it because it's turned down so far.
See, now I just look at mine and say, okay, well, that's neat, and then I get rid of it and I go back to like something like that with my Ichimoku setups or whatever flavor of technical analysis I like this week. So that periodic volume profile is new on TradingView. It's only a couple of weeks old, and dude, it's the real deal. So I think that handles Orca well. So let's actually go look at SPY. We have a request to look at SPY and what happened today. Let me clear all of my junk off of SPY. First off, a little nugget here for you. Ichimoku called SPY negative all day, even though it was kind of a weird setup on the 30-minute chart here. On the 5-minute chart, I mean, it just was absolutely brutal. So, but anyway, I'm not going to Ichimoku. That would take like 4 hours to explain all of that nonsense. We're looking at volume profile. So first off, let's look at session volume. So we have session volume, 15-minute chart. I like the 15-minute chart because look how many days I can get. I can get a really good perspective of the market. And I'm seeing down, 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 little bitty up, down. So we've actually broken that market structure today. Okay. Yeah, that's today. So we're looking at this. Now I'm going to take my volume profile first and foremost. And this is what I'm calling your naked volume profile, right? This thing has not been tested in market hours yet. This has not been tested in market hours yet. And this one has not been tested either in market hours yet. These are naked lines. They're also not very straight lines, but you get the gist, okay? It came up this wick. First off, you're going to see these freak wicks is what I call them, that do this random nonsense every single day. A lot of times they actually give you an idea of what the market's going to do. I don't know what they are, who causes them, or why they're there, but a lot of times you're going to see this stuff actually be somewhat predictive on the direction of the market. The big wick is bad, and this is telling us that prices are going to go down just looking at the wick. But looking into the volume profile from the day prior, this is all crappy. Okay, this is we're so far below that. Whenever we open our prices over here, it's hard to imagine it getting back up to this POC. We have the pre-market high in the way. Mainly, we have yesterday's low. Notice the two lines that aren't in the volume profile: yesterday's high, yesterday's low, yesterday's high, yesterday's low. It's part of the box, part of the background, but it's not actually part of the volume profile, and it should be, because these lines, as you well know, matter. Yesterday's high and yesterday's low are part of the whole strat thing. You can't have a strat, you can't have a candle without a high and a low, right? So we're actually looking at yesterday's high and low in a strat-ish way. Now, granted, I'm not a strat dude, so I'm not even going to pretend to talk to you about that. But we're looking at yesterday's low, and first off, we have a rejection in pre-market off of yesterday's low, leading into the very beginning of the day. Next thing here on this 5-minute or this 15-minute chart, let's go into 5-minute chart. Actually, that was just for setup. Look at actual trading chart, something that I would use. I'm looking at this saying, okay, well, it rejected off of yesterday's low in pre-market. If I see bearish opening or bearish opening, then I'm going to be, inclined to take only bearish signals. What bearish signals am I inclined to take? A move with the 50, a move below the 0 line with my MACDs. That would be one form of trigger. A price action trigger, which you have the swing high, swing low thing going on here. If you were to notice, look at this line here. Our pre-market lows stretched out into the day, gave you a perfect retest, good place to enter. This would be a good bearish signal, tight stop loss on the other side, beautiful trade. And this volume profile, if we were to look at it, and let's look at it in this context here, it's developing, right? So let me get this out of the way. This is developing. So we're seeing this play out. If I were to hit play, we're going to see the candles do their thing. We have a bearish MACD. It just crossed below the 50. It broke down below today's point of control. It retested up to a known level of support and resistance. It's below yesterday's POC. Everything here is telling us that this should go down. This should go down. Now, all I have to do is have a good tight entry on this. So a good tight entry on this would look something like this. You could throw a VWAP on your chart, whatever. Okay. So now we know where VWAP is. Big money might be loading up on VWAP, whatever the case may be. We could hide just above VWAP. We could look for that 2-to-1 risk to reward profile. This is what I look for in my momentum trading, and say, okay, well, let's take the trade from there. And we hit the play button, and boom, we actually get another tag on VWAP. We have a nice little, first off, we have a nice little breakout for a quick scalp. Comes back up, never hits a stop loss level that would chase us out of this market. You could reload on VWAP, or you could just wait it out, and you end up with a huge trade that is about $3, maybe $4 of premium added to SPY, which is going to be a pretty decent gain. If I can find the play button again, look how that point of control is actually acting. Well, until it moved, but it was acting as a form of resistance. This is telling us that the value is concentrated down here. People like this price. Okay. So we can't, if people really and truly like this price, we can't expect it just to completely and totally bottom out and, go tits up for the rest of the day. We have to start considering what's going on in this line work. We have static highs, static lows in this area, somewhat rising lows. So we have somewhat of a ascending pattern going on here. It's below VWAP. We could still be taking positions on VWAP and looking for that trade down. And we could be looking at putting a stop loss just above VWAP. Coincidentally, that's lining up with the point of control for the day. And we have that value area high, value area low, two potential areas where we could take profits or change our sentiment of our trade.
Can I point some out too that you mentioned? But so on his MACD at the bottom, see how the two lines are below. So he mentioned the 0 line, right? And I use the same in pretty much. I mean, a lot of people use it. It's not a trade signal per se, but it's your red light, yellow light, green light, right? And Brian will tell you, if the two lines are below the 0, it's still a red light.
It's still bearish. Yeah, it's still
so
bearish.
so you don't. So it's telling you, while it looks like price might be battling that point of control, and someone asked in the questions, these are very much supply demand levels. So price will act like a magnet around those levels for a while until it bounces off of that level in one direction or the other. We don't know. That's why you use something like this in combination with each other, right? It's kind of like yellow light right now because it's close to the 0 line on the MACD.
And we're seeing higher lows. We're seeing higher lows in the momentum, and we're seeing higher lows in price right now as far as this little micro trend going on here. So yeah, it's at a yellow light for sure. But if we're going to use our POC, which moves throughout the course of the day as a filter, and we're using VWAP, we have VWAP on the chart now too. So that's kind of neat. Why would I be bullish below VWAP?
Exactly.
There's
so
no
like
reason.
that should save most new people from thinking that, oh, this looks like it could pop up. It's basically you're saying, hey, look, maybe, but it's not time. So not until you get that flip. We don't have the flip on the MACD yet. You don't have it clean above.
So much of trading is about probability. Because I mean, there's no prediction method that is going to work 100%. It's looking at a trade and saying, is this a good, do I have a good probability of winning, or do I have a high probability of losing? If you're not able to answer that question, if you're not able to look at a chart and answer that question, then you're not ready to trade.
Right.
You need to learn a little bit more. Like you're saying here, with the MACD being below the 0 line, that in and of itself isn't that much of a problem. However, what is a problem, a major problem with it, is we still have a period of lower highs in the MACD. To me, that's a bigger red flag than its location, right? Being below the zero line is damning enough as it is, but having that in combination with lower highs, I'm still not interested in bullish calls or bullish plays. I'm still interested in taking bearish plays. And while that bearish play may not work out, it has a higher chance of success than a bullish play does at that point. Now, what would my stop loss be if I was to try to enter right here? It would be just above VWAP, because that's where it needs to be. That's where it needs to be. That's where big money is playing. They're playing their games on POC and VWAP right now. So I'm going to hide just on the other side of it. And big money wants to let it run. Then I stop out, and I can always flip my trade back to the opposite side, and I can be a bull. I can switch species of mammal really, really quickly if I need to or want to. That's the beauty about it. But you can't do that if you're sitting there on a negative 65% position. You have to be able to play tight. You have to be able to protect yourself. And this is one of those ways that you can protect yourself, looking at this and saying, okay, well, I had my trigger cross right here for bullish trade, and I would have gotten, what would I have gotten out of it? $1 a premium? Is
Yeah,
that
would,
is that worth $400 worth of risk to get in this play?
not
Absolutely
even.
not. Absolutely not. But if you're looking at the crossover here, like the crossed in pre-market, and then you see this bearish opening, you see this rejection out of VWAP and everything else, was the $5 worth of premium worth fighting for? Well, absolutely. Absolutely. Everything's telling you that this is a bearish play. You have a high degree of success with this play. And not only that, but you have much lower chance of losing money. Even if you have, worst comes to worst, you could probably break even on this trade. That's good news. That's good news. We have a way to filter our trades. So would you play the initial breakout of the POC and VWAP, or would you wait for a retest before entering? That, my friend, is $1 million question. Because I'm going to say it depends. And what does it depend on? The force. I don't know. Sometimes
The force. Did you say the force?
It's experience. It's whatever. I'm going to default to say play your retests.
So
your initial breakouts are usually going to screw you unless you're going to scalp. Unless you're good at scalping, play for your retest.
We have a lot of traders in all of the server community, and you guys will see people that are amazing scalpers, and they'll be in trades for 5 to 15 minutes sometimes. That's a scalp trade. You can play that and with a high probability, but you also have to know that you're really going for a very small percentage win, right? Somewhere like 5 to 10, 15, 20%, right? And anything above that, you can just ride it, but
Dude,
that's actually
my average hold time is 6 minutes.
Oh, you're insane, man. I could never do that.
Now, my average hold time is 6 minutes, but my average profits are 14%.
Yeah.
My average losses are 3.5%.
There you go.
I usually win 70 to 85% of my trades if I'm playing like that. Like on live stream today, I was swinging for the fences, and I made 2 trades, and they lasted like 2.5 hours each, and they were torture. Right? I like getting my 15% trades, dude. I just about will kick over my chair and start doing cartwheels in my office for a 25% trade because I scalp. That usually means I made 25% in less than 3 minutes.
Bingo.
I am in the freaking money. This thing's going to ride, and then I'm not scalping anymore. Now we're trading trends. But as far as like the opening morning volatility and things like that, usually I'm in and out of a trade in like 3 minutes. I'm good with it. I like it. If I want to make more money,
that's appropriate, right? So to everybody's point, right? It's your personal style, right? When you guys will talk to me and stuff, my style is different. Like my average hold time is 2 to 3 hours sometimes, but my average win is 100%, right? And I have losses that are down to 20, right? It's everyone's or more. It's everyone's kind of you find out what works for you after a while. For me, I like the momentum. I know that I'm a really crappy scalper, so I try to stay away from it as best as I can, right? And you guys see me avoid the mornings like the plague, right? Or avoid Mondays, especially Monday mornings like the plague.
And I avoid Fridays like the plague.
You know what? And Fridays are my heaviest day. So I mean, there's no one right way to trade. That's the point of all of this. But what you guys are learning in these series are the things that work across all markets for all scenarios and all styles. We'll be able to combine a lot of this stuff. So if you use volume profiles and you combine it with the strat daily, weekly, monthly kind of highs and lows, and then you zoom out and you look at your accumulation distribution on a larger time frame. We combine all of that, right? And that's really how it is. What we don't use, what we're not going to show you is like, here's like a base RSI, right? And I think if Brian's actually going to get into it, he's got hit like his specific indicator. That thing looks
Yeah,
pretty.
this is my stochastic.
Yeah, so stochastic is definitively different than RSI, right? But and it's for swing high, swing lows. And you know what? I'll let you get into it. Um,
So this thing is not very much different than your regular stochastic. It has a divergence hunter on it. It'll only throw a divergence signal whenever it's in an overbought or oversold condition, quote unquote. For those of you who know me, I absolutely hate the terms overbought and oversold because they're usually freaking wrong. Okay. But for the sake of
it,
communication right now, we'll just use overbought and
no,
oversold.
we should make that a point, right? I
Okay,
think
let's make it a point
it
then.
is, yeah, is
Here,
not
here's
something to trade off of, right? Like it
You know what?
doesn't matter.
I'm actually going to stand up and walk around the office on this so I can think while I move my hands. So anyway, with the stochastic or the RSI, not the MACD, but if we're talking about the stochastic, the RSI, the MFI, or any 0 to 100 momentum indicator, like this, that indicator is actually two indicators built into one. It's going to behave differently in a range than it does in a trend. Okay, so your overbought conditions aren't going to mean anything at all in an uptrend. Nothing at all. Your oversold conditions will. The flip is going to be true if you're in a downtrend. Your oversold conditions aren't going to mean nothing. They're going to mean nothing. Your overbought conditions are actually going to give you a point where you can enter. But that indicator changes and it acts differently if you're in a range. If price is running mostly sideways, then your overbought and your oversold actually behaves as overbought and oversold, and you can start looking at those. Now the stochastic reacts really fast. I use a 1433 stochastic. It's a little bit slower stochastic. I think the default is what, like an 833 or something like that. It's screaming fast and it gives you so many false signals. I slowed it down to a 1433. And I've added a line to it. I've added a moving average to it. I use the DEMA. You could use really whichever one that you want to use. I love the double exponential moving average. You could see where the crossovers of the line itself with predetermined conditions. We're not going to get into all those conditions and all of that. It's just too much to try to talk about. But it gives me good areas of potential buys and sells. This is areas that I see one of these boxes pop up and I get interested in what might be happening in that chart. And I look at it to decide if I'm going to take the trade. It also gives me my divergences. So the
Which I
stochastic
think is
fits.
really cool. That's divergences are very hard to spot,
Oh,
especially for someone learning.
and
Um,
here you go. Here you go. Why does it change colors? Can you venture
yeah,
a guess real quick?
no, I love it. And so if you were going to use an oscillator, right, the 0 to 100 type of, up down indicator, that's what I think everybody would say is like the divergences are probably your best, um, what's the word I'm trying to say? Advantage, but
There's some of the best indicators of what might be happening with that trend. Now,
they're
trading
warning signs,
divergences.
right? They'll give you the best
Yeah.
warning sign to be, maybe even though price action might be saying it's still going, that's that's the one piece that might give you like a hey, yellow flag warning sign.
Well, I was actually in a trade in Tesla late this afternoon. I was in a bearish play and I seen a divergence pop up and I went
Oh,
ahead and
you and me
set my
both.
stop loss to where I only had $75 worth of risk for my entry and just to see what would happen. And I ended up stopping out on it with a $75 loss. If I didn't know that divergence was there, I would have never moved my stop loss. Um,
Interesting. I think I was in
but
that exact same play today, man. Although I was in it from yesterday and rolled
yeah,
it, but yeah, I mean, I saw it. I had 620 today on Tesla for my actual low target, but it didn't get there. And yeah, just that higher low, which would have probably been your divergence. Um, yeah,
so
initiating the stop
the
loss.
last little thing that my stochastic does, by the way, is it changes colors whenever it's above or whenever price is above or below VWAP. That's why it changes colors.
Oh, that is cool.
So it's letting you know, it's just
Is
one
this
more thing. That way,
publicly available?
no, it's not publicly. It's for my subscribers only, but you can build most of this on your own with like adding your own moving average to it and things like that really easily.
Right.
I didn't want to do that. I want to get that out of the way there. So what the stochastic is trying to tell you is whenever prices may be ready for a turnaround. So you have the K line and the D line. You're going to be looking for crossovers between the K line and the D line. You have the 80 and the 20, which is your quote unquote overbought and oversold. Just know that these are dynamic numbers. Sometimes your 20 needs to be a 30, or sometimes your 80 needs to be a 40. It all depends on what your stock is doing. And like I said, that's outside the scope of what we're trying to talk about today. But the stochastic, this was a hard indicator to use today because we have a downtrend, but the entire thing is moving in an uptrend, meaning that there is a huge bullish divergence. The entire day on this 5-minute chart with the stochastic is a bullish divergence.
Yeah, so to that point, like that's I don't know that it's hard, but I would absolutely say like that is explicitly so. I don't know if you guys, if you're watching my trades, I was frantically, I was like very clear, I'm closing out all of my short stuff today, right? And it's because of this kind of stuff, right? You could zoom it out, you can find it a lot of different ways, but we were basing bottoming out today, and I don't use this kind of stochastic, but I mean, this is clearly telling us right now, hey, look, you know, you have it's a yellow light flashing, right? Do you want to press a bearish bet? It's saying probably not the best idea.
Right. I should do that red, green, and yellow light thing on my, that would be neat. I need to figure something out with that. But anyway, we have a question in there, Q&A. What is a divergence? If this is price, say blue line is price and the red line is our oscillator, right? What this is showing you is if price is making a higher high, but we're losing momentum on the indicator, that's telling us that there's a potential reversal coming. The flip side of that would be the bullish one. We have a lower low, but the bears are losing momentum. The bulls are gaining momentum on it. This is telling us that there's probably going to be a bullish reversal of some type, whether that's a full-blown trend reversal or just a swing high or swing low in the trend is something that you have to wait on the chart to reveal to you. But it's giving you an idea. Like you said, it's a warning sign. It's a beautiful warning sign. And it's really good for knowing when to take profits. You see a divergence on your indicator, 9 times out of 10, you probably want to go ahead and close your trade. Hidden divergence is going to be a continuation pattern. Same thing. You're having lower highs, higher lows on your between your indicator and price. This is telling you that it's probably going to continue downward in its bearish thing. You're going to see these more already in a downtrend, and you're going to expect more downward action off of it. Flip is true for the bullish divergence. I don't really look for the exaggerated divergences at all. They're somewhat rare, in all honesty. I tried for like 3 hours one day to find them in a chart to talk about them, and I couldn't even find one. And I went through like 150 charts and got tired and never looked at them again. But based off of the fact that this entire stochastic is looking like a bullish divergence, that leads me to be in bullish and SPY tomorrow. Okay. Like I said, we're getting higher highs, but we're having lower highs. That's pinching together. That's showing you that there's an increase of momentum, that bears are losing momentum. Okay, because the bearish momentum is all the way down here below 50. Bullish is above 50. That's where their momentum lives. So bears are losing momentum at this point. The sellers are losing momentum. Even though prices are going down, they're losing momentum. We're having higher highs on this, higher lows overall. So that's potentially saying that it's going to come up like that. So I'm leaning bullish into SPY tomorrow, which is a little bit weird after today. But it is what it is. But we're going to let the chart speak to us tomorrow and see what it has to tell us. And the way that I want to set up to look for tomorrow is going to be looking at that POC, looking at today's value high, looking at today's value low. And of course, I'm going to do this for a couple of different days. Like I showed you earlier, you could always come over here and just extend all of this stuff to the right. Boom, 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 like this. And trash can that. And now it's going to extend a lot of this line work over to the right. What it's doing is anytime it gets touched, it goes away. It stops. Right. So that's not letting you know there's no uncleared value in this area. There's no uncleared, there should be no uncleared orders in this area. Now, of course, there may be, but this is the best that TradingView can do for that with us without giving us level 3 data, which if they ever give us level 3 data, me and Jason are going to absolutely crush the market. Do I use the POC every day on 5 or 15 minute? It doesn't matter. Look, I'm going to go to the daily chart here. It doesn't matter where your POC, what chart you're on, your POC is always going to be the same price. So always going to be the same price. So I use a multiple time frame analysis setup that looks like this. I have Heikin-Ashi with EMAs over here. I have a 15-minute chart with Fibonacci stuff going on over here. And I have this going on over here. I have whatever indicators I feel like fooling with for that day down at the bottom on this chart. This is my action chart. This is my trading chart. That's why it's a little bit of a different color. But it doesn't matter what time frame that I put this on. If I drop this session volume tool on this chart, if I switch it over to an hourly, it's still going to be the same volume profile. It may look a little different because candles are bigger, there's fewer of them, so on and so forth, but it's still going to give you the same information. It's just going to be more concentrated if we look at it that way. So
That's a really
looking
good
at the
explanation.
direct,
I think that hits both the questions, right? So like Orca's asking, do you use it every day or just the 15 and 5? I think
let's go into the daily chart right quick, and I think that'll pretty much wrap up everything. People be able to watch the replay, and I think be able to. I mean, I understand right now, especially with the way that I talk and I jump around and everything else. You're drinking information through a fire hose. I get it. Watch this replay.
you might have had a
Watch
couple
this
extra Red Bulls,
you know,
coffee, something.
what's that? Coffee through a fire hose? Is that what you want?
No, no.
That's what I need sometimes, I swear. Let's turn this off. Let's turn this off. You're a swing trader. You don't believe in this day trading crap. You are an investor. You like to look into Elon Musk getting sued every day. Let's talk about that. You're looking at this from an investor's point of view. Okay. You want to use the volume profiles. You want to use momentum indicators and things like that. You want to be a technical investor. That is a thing. That is a thing. So you want to be fundamentally driven, but you want to have technical prowess to know when you should sell and all of this. And notice my session volume tool is useless to you on the daily chart because you don't get any information at all. You just get a bunch of random lines shooting out all over the place. Fixed volume profile, ladies and gentlemen. Come over here. Let's go ahead and break down Tesla right quick and show you exactly how I would do this. First off, I see a range right here. This is it's a shrinking range. It's more of a triangle pattern or a wedge pattern. But for the most part, we do have known highs and we do have known lows, and price stays in between those high and lows for a significant period of time. So we're going to come over here. We're going to look at that. I'm going to go ahead and come to my settings. We're going to extend that to the right. And we have two different ways that we can look at this. First off, we're looking at this from this point in time all the way to this current day. This is going to tell us where their concentration of value volume is. This is where major money might be looking to make a move. The POC. Okay, now this is a little bit of an arbitrary start point. We could always look at it from a supply and demand aspect. Let's turn extend on.
Right there, you had it extended all the way over, right?
Yeah, it goes all the way to current day if you hit extend right. If you turn extend right off, so you're just picking a start point for it at that point. So you turn that off.
Turn it on again. So just so everybody knows, what Brian's telling you is that Tesla is going to 425.
That's when you actually, yeah. What I'm looking at right now with Tesla.
Well, legitimately, let's be clear.
Let's be clear. I actually do think that Tesla's headed below 600. We'll leave it at 600. Yeah. So
but we have to break this level, right? Look at that. Do you guys see that blue line, that top blue line? Like, do you see how it bounced off to like this week, right off of that? And how many of us were actually trading that exact bounce? I mean, you could do this any way you want, but if you want to talk about supply, demand, accumulation, distribution, what have you, it all lines up, and you can visibly see it through using these volume profiles that he's showing you, right? So, and that's huge.
Yeah, for the supply and demand folks, those are just learning, those who use supply and demand as their number one trading technique. Notice this high volume node right here. If we were to look at supply and demand, let's look at it the way that I would like.
Node means node means just like a point.
Yeah. Let's go flip it to a Heikin-Ashi chart. This is how I would do it. I like to look for in supply and demand trading. I like to look for continuous green bars or continuous red bars. I like to find where those bars stop at, and that's where I like to draw my zones. So if I want to sit here, this isn't a supply and demand course. I'm not going to explain everything there is to know about supply and demand. I think y'all already did that anyway. But what will we expect to happen with Tesla? Reasonably, what will we expect to happen with Tesla if the supply zone breaks or this demand zone breaks? we would expect this thing to drop like a rock. What is the volume profile telling you? What did I say about low volume nodes? There's nobody interested in trading these prices. It's going to want to move through this area very fast. Where's the next high volume node? At a very scary place for anybody who bought Tesla at 1200. I can tell you that.
Absolutely. You know, one thing about those low volume profiles, if you guys are using VPVR or however you want intraday, see how Brian's chart, it separates between buy volume and sell volume on those two different colors. You'll see when those like low volume areas are getting filled in. To me, that's almost, it's like a gap in a chart. You're like, oh, there's a gap there. It could get filled, or it should get
Oh,
filled.
this is the gap. This is
Right.
the gap, man.
Yeah, exactly. So there is a volume gap that should get filled. Because if you look at this, right, just from a chart perspective, how much time has it spent in that little, you know, untraded area? It's very, very little, right?
It
That was
looks
the
like
breakout.
2 days.
Yes. So very small period of time. That's like a gap in a chart, but just as gap in a volume perspective. If you're watching intraday volume profiles, you'll see all of a sudden buyers completely disappear, and that's when you go parabolic. Or you'll see sellers completely disappear, and that's when it'll go parabolic. What's cool about a volume profile tool is that it'll visibly show you exactly when that's happening and how that's happening.
Yeah, and you match it up with like your ADR or Bollinger
Yep.
Bands is another great one for this. Momentum indicators, things like that. Supply and demand trading is absolutely fantastic. It's something that I teach with my services. Is actually the foundation of everything that I teach starts with supply and demand for support and resistance. I mean, everything that you're looking at on this Tesla daily chart, everything that I'm looking at tells me if this thing is, you know, sellers are bold enough to break 548, then it's going down to the low 400s. It is what it is, because it's going to overshoot this POC. It's not going to stop right here and say, okay, well, it went far enough. It's going to overshoot. Fear is going to overshoot it. Where's the actual value concentrated in Tesla? Well, this entire time, all the way from August of 2020 until now, pretty much anybody who was buying investor wise, anybody who was buying above value was getting screwed. And they didn't even know it. They thought this thing, what was the price targets 2 months ago? $4,000 is what Kathy was saying, Kathy Woods.
Sure.
And my response to that, I believe I put it on Twitter, is it's closer to $1 than it is 4,000. Just note, you know.
Mathematically speaking, absolutely factual.
That woman irks me. But last thing I want to show you is we're going to go back to that periodic volume, and then I think that we'll have officially covered enough. So let's look at periodic. Periodic volume profile, and this is going to not do anything at first. We have to change it. So we're going to come over here. Let's look at monthly volume. Sounds fun. Let's do that. Let's turn on some extensions, and let's turn on our value areas.
Good,
If you were to, yeah, it's a little bit busy, huh? But we would definitely need to tone these colors down just a little bit, because this is offensive in every possible way. But you have your concentrations of volume, even if you're to turn off the blue lines altogether.
Yeah, you guys can do your own settings, but I like that, right? Like we could see it's trading at 652 right now. It tagged that first.
Control.
Dude, is there a heart floating? How did that happen?
Oh, what?
We have reactions. I like this. I saw a heart float. There's a laugh. What is happening right now?
Oh, okay. I thought you were going nuts. I thought,
I'm like, what? Oh, it's beautiful.
All right, so I'm gonna have to start using that box in my Zooms, because I need this in my life. So anyway, looking at the POC, the monthly POC, this is from the month of July of 2021, is where price is actually finding support right now. That zone of support, if you want to think about supply and demand zones, it wouldn't be hard to argue that this is where that concentration of volume is. So this is what price is going to be arguing with, going back to supply and demand traders, looking into the Wyckoff stuff or Elliott wave stuff.
Yep.
If you want to get all, we're not going into that rabbit hole today. I can promise you we're not going into that rabbit hole. But if you're looking at your Wyckoff stuff, back off. We're at the daily chart. We have uptrend, a little bit of a correction, uptrend, big correction. It's threatening to take out the swing low. If it takes out the swing low,
swing low,
we're talking about the potential of a head and shoulders formation or an absolute murder in this market on Tesla.
Yeah.
Either way it goes, it doesn't look very bullish at this point at all. I would challenge anybody and say, if you're buying, you have people all over social media saying, I'm buying Lotto, Leap, Tesla calls now for $2,000. Are you smoking crack?
Yes, like that's exactly.
Yes, you are smoking crack.
Yeah, you probably, but yeah, exactly the point of like understanding this stuff, right? Like and this goes back to all the way back to just using RSI, right? Like if someone says something's oversold, I would, and they're like, maybe you're watching, just change the channel, get out of there, because you don't want anything to do with that, right? Like it doesn't matter. Like I mean, it's fluffy stuff. It's a retail tool. If you want to trade what's the word I'm trying to look for, and actually make money, you would ignore that. Because
here's a good rule of thumb. If you're doing what most traders do, then you're going to get the results that most traders get. 97% of all traders, this is a fact, you can look it up. This is a tracked statistic. 97% of all retail traders are unprofitable. You do not want to do like most people. You want to be a little bit different. You want to find out, you want to dig a little bit deeper. You want to challenge yourself a little bit harder. You want to research just a little bit more. My research, I feel at this point, it's incomplete, but it's at a point where I am consistently profitable day trading options on one of the most volatile stocks in the history of the market. That should say something. This stuff works. I pretty much exclusively trade Tesla. Jason knows this. I talked to him about all the things. Like, I took a target trade today and I made 400%. Like I took 18 Tesla trades today and made 6% on all of them. And I'm excited,
Yeah, absolutely.
But, I like the volatility. I like the instant gratification. It fits me as a scalper, but this stuff works. And I can look at these lines on the charts and I can look at the other indicators that I use and things like that. And for the most part, I said it on my live stream today, whenever I was talking to my subscribers, I said that my analysis is rarely ever wrong. My entry might be really, really poor, but my analysis is usually not wrong.
Right.
Mr. Reeves, do you have a Discord or a YouTube? My YouTube, if you look up Gator Traders with an S, yes, I have a YouTube. I have a website, www.gator-traders.com. The website is functioning. It does have information on it, but I haven't been updating it. I'm working on.
You still doing your newsletter?
Well, work's been getting in the way of me doing a weekly newsletter. So I do have a weekly newsletter option. You just might not get it every week right now. The summertime's crazy. Everybody knows how the summertime goes. I'm a one-man show. I don't have a team. It's just me. I do have a Discord. It's Gator Traders Discord. I'm sure we can put an invite somewhere up there if you're interested in that, or you can go to my website. Again, it's www.gator-traders.com. I have a free blog on that website. I have an invite code for my Discord. You can join the newsletter, and at some point I will be doing a newsletter as well. I do offer premium services. That's not the point of this. We're not going to get into that. Okay. You can research that on your own at a later date. We could talk about premium services at a different time, because I'm not trying to grow my business fast right now anyway. I like keeping a small crowd of interested people that I can focus on training and working with and getting to know one-on-one. And we're seeing people become profitable all the time. Then they start moving on to more advanced servers like Paper Gains. Would be a good one. We have some of our old members are over in Paper Gains, and they're making an absolute killing with these crazy iron condors, spread leg eagles, and all this other stuff I have no idea about.
Millennium Falcons.
Yeah, I'm just, my job, I view my job in the education as teaching people truly how to determine whether this thing's going to go up or down and how much. And if I can get you to know up or down or how much, then I've gotten you to where you can consistently make money in the markets. And now you can figure out exactly who you are as a trader, what type of trading that you want to do, and how advanced those trades need to be. What's Paper Gains? Paper Gains is just somebody who wants to be like me. That's what that is. We have that in
100%.
chat.
No, so Brian goes live on YouTube, I believe, also still, correct?
Occasionally I do go live on YouTube. Again, work's been getting in the way. It's been a very, very bad summer for me. I have a recession-proof job, and seeing as how the market's moving to a recession, I really don't want to give up a recession-proof job just to trade.
Yeah.
So I'm going to go ahead and hang on to that for a little while longer.
Boo.
Maybe, hopefully not 3 to 5 years. Hopefully this is a relatively short bear market, but we'll see how that works. Is
So
there
go
gold hanging
to
out?
YouTube, right? Subscribe to Gator Traders. If he goes live, you guys will get a notification. If you want to check out his blog, it's gator-traders plural.com, and you can find everything else
Yeah,
on there.
there's plenty on there for that. I am going to be starting a couple of new series on YouTube here soon. My YouTube is very bare bones. Like I said, I cleaned out a lot of the old stuff that's not relevant to the market anymore. I am going to be firing that up pretty soon. I do want to start showing trades. I do want to start showing exactly how much percentage wise and money wise that I'm making on these trades, different types of setups. So I'm really wanting to start steering my YouTube being a true educational resource for traders. My goal is to help people. I want to help people. Even if I don't make money off of helping you, I want to help you, okay, in any way that I possibly can. Unless anybody has any questions, that's about it. I've ran out of sweet tea, so I have nothing left to drink, and I'm
Kelly
thirsty.
Southern, sweet tea.
Definitely,
That's where the energy is coming from.
probably right. Drink coffee all the way till noon and drink sweet tea all the way to midnight.
I still have you thank you. Yeah, absolutely. Yeah, I still got my coffee here. So awesome. Yeah, looks like we're good. And dude, it's a pleasure as always. Brian's a partner, right? So we've been working together on all kinds of different stuff from here, time to time. So you might see him on some of our stuff. Well, clearly you will now. And I'll post this on our YouTube. Brian will have a link. He'll post it on his. And again, yeah, very. Oh, show us the parameters. You can watch the replay when we send it out.
Yeah, there we go. And it's probably going to take forever to export this to an MP4. So
It's all right. I won't edit. We'll upload raw.
yeah, let's roll with it. No editing.
Cool.
All
right,
cool.
guys.
All right, I'm going to eat supper. Y'all have a good one. Thank y'all. Take care and God bless.
Appreciate it. See ya.